When you take a look at the earnings that are being reported, there were a number of major tech companies today, others earlier this week. Some good news, some bad news, a lot of volatility, an election in 5 days here in the States that's going to be a nail biter. I probably would wait until after the election, until the smoke clears before I buy anything aggressively.
Anything aggressively. And so if you are looking at buying something aggressively after the outcome is clear, then what would that be? Would you double down again on the tech names? Because it seems like they are correcting right now, despite good numbers, by the way. Or do you think you would broaden out?
So actually, certain tech names, in the lead-in, you spoke about Amazon. Looks like a rosy picture earlier this week. Alphabet, pretty good news. Uber announced some poor results, and the stock was marked down 9% today, but I think that one's a buy on the dip. Another thing that was said in the lead-in about Amazon, they are going to spend $75 billion, and according to the CEO, mostly on ramping up Gen AI. This tells me, election or not, that 2025 should be another very good year for the large language model builders and the semiconductor companies like Nvidia that support them. We always thought that Gen AI and other aspects of AI would be a big deal over time, but the next year, more building of these models, a lot of infrastructure. That means semiconductors and big servers and data centers. I think that's the trade again, as it was for 24. I think that's going to be the tech trade in 25.
For the last 2 years, Nvidia has been the archetypal artificial intelligence, AI, stock. The company has experienced unheard of growth due to its supremacy in the market for the chips that power the AI data centers. Since the start of the year, the stock has increased by almost 850%, and it is still rising as its third quarter earnings announcement approaches. Investors who are considering investing new money in the stock are in a risky situation. Although buying along the way has only so far shown to be prudent, I don't blame anyone for feeling like they're late to the game. So is it wise to purchase Nvidia stock before earnings? Here's what you need to know. Given that the whole stock market has historically averaged an annual return of roughly 10%, Nvidia's outsized increase is unusual and nearly as dramatic as a bubble poised to burst. However, AI has brought forward special conditions for the company. AI has been fully adopted by IT companies, presenting what is likely the biggest growth potential since the late 1990s, when the internet first began to take shape. A significant part of the AI opportunity, the chips that drive it, has surprisingly coalesced Nvidia, which holds the largest market share, estimated at between 70% and 95%. As you can see here, its earnings and revenue have grown in tandem with the stock price. Why, therefore, does Nvidia continue to rise? In other words, the stock is still fairly priced given its projected growth. Revenue expectations are still rising, according to consensus. With the company priced at 50 times earnings expectations, analysts predict that Nvidia will earn $2.82 per share this year. Additionally, they predict that during the following 3 to 5 years, wages will increase by an average of 35.6% every year. Even now, with a price/earnings to growth ratio, PAG, of 1.4, the valuation is fair given its anticipated growth. When combined with the fascinating AI narrative, Nvidia remains appealing, particularly when contrasted with staid, established businesses that have comparable earnings multiples but far slower growth. As long as Nvidia continues to live up to these high standards, everything will function. However, the market expects more as it rises. Last quarter, the company's sales topped Wall Street's consensus expectation by just 4.5%, the narrowest margin since the AI boom began. In a few weeks, the business will release its fiscal year 2025 third quarter earnings. The risk is if Nvidia fails to live up to the high standards set by the market. It appears that supply limitations rather than weak chip demand would be the main cause if it does fall short. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts. So hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
Paul, speaking of AI infrastructure build out here, what would bring investors a bigger upside from this level, from this point on throughout to 2025? Software side of the tech or hardware side of the tech?
I actually think it's hardware. When I say hardware, specifically semiconductors. Folks originally thought at this stage in the AI build out that we would go from the infrastructure players, which are semiconductor and hardware, to these software vendors. The software vendors haven't shown me enough monetization of artificial intelligence. And I think based on comments like Amazon spending another $75 billion on this stuff, and that's going to be reported by all the other tech majors, enormous sums of capital spending on AI, I think we continue with the hardware and semiconductor focused AI trade for another year.
The demand for Hopper is still high enough, Huang stressed, that shipments will rise in the third and fourth quarters. According to reports, Nvidia has sold out of Blackwell for the upcoming year. Updated guidance and commentary on how well the company can meet all of this demand will likely be the most significant news from the next earnings report. Given that a limited number of large technology companies account for a sizable portion of its sales, Nvidia does face the risk of customer concentration. In what has effectively turned into an AI arms race, tech giants like Microsoft have yet stated that they will continue to purchase processors. Nevertheless, the stock could be very erratic. Given how many investors would be holding on to profits from the previous few years, any skepticism over Nvidia's growth trajectory could cause the stock to plummet. It's challenging since, fundamentally, the prices are still affordable, and the company's leadership in AI makes it difficult to dislike it over the long run, 5 years and beyond. What is the answer then? Investors should proceed cautiously, making small, scheduled purchases utilizing a dollar-cost averaging strategy. In this manner, even if the price keeps rising, you will still have shares and cash on hand to seize greater opportunities when they arise. At these higher levels, Nvidia is riskier, but it can be managed with a plan and a long-term outlook. The most significant stock this year has been Nvidia, which has also reported significant gains. Sales and profits for the leader in artificial intelligence, AI, have been growing at a remarkable rate, and the share price of the company has increased by over 180% this year. The company's share price has soared about 860% since the start of 2023 and more than 2,650% over the last 5 years, and that is just the most recent leg in an amazing run. As of this writing, the company's price-to-earnings ratio has risen to 66 due to these tremendous gains. There are high growth expectations associated with this valuation. Therefore, it's legitimate to worry that the semiconductor company's stock price has increased too much too rapidly. However, another valuation indicator indicates that there is still room for growth in the booming AI stock. So what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
Several big tech names have provided their latest quarterly results, many reporting higher spending to capitalize on that AI play. Amazon, Microsoft, and Alphabet revealing they spent a total of nearly $51 billion in CapEx. That is up from the $30.5 billion in the same period last year. As for the benefits from all that AI hype, all three companies have seen revenue growth in their cloud businesses, potentially an encouraging sign for big tech. Creative Strategies CEO and principal analyst Ben Beharin joining us now to discuss all this. Ben, it is always great to see you on the show. I did want to start with Apple, Ben, because you know that company so well. And I was talking to Apple CFO Luca Maestri, and I asked Luca about the rollout of Apple Intelligence because it's different, right, Ben? It's gradual, and I was trying to ask Luca how he thought that kind of gradual rollout will affect the iPhone upgrade cycle. And what Luca told me was that basically it's tough to predict because, as he said, listen, this is different for us, this kind of gradual rollout. But yes, it could ultimately mean a different kind of cycle. Is that how you're thinking about it, Ben?
Yeah, I mean, I think if you look back, and this is a consumer point, I know we're going to talk about enterprise AI in a little bit, but from a consumer standpoint, it's been hard to look back on, the history of a couple decades of consumer electronics and really see software itself drive a hardware cycle. It's typically been very hardware driven. And I think that's the hardest comp that many of us are having to make, is to really look at how much of a software angle is actually going to drive a hardware cycle when we're kind of like, that's not really a comp that we've had before. So I think the unpredictability of it is definitely right on. I mean, I do think there's elements of coming. I think Apple Intelligence is the most mature kind of consumer AI implementation at a system level for customers. I think Apple's now got to go market and tell that message and make it, clear to consumers why they're going to want to use these features. And that's where I think we just don't feel that pull yet. We're not seeing people line up or have drastic FOMO, right, from hearing about their friends use Apple Intelligence and then they don't have that on our devices. So I think another few quarters are needed for that. So I think they're right in kind of the conservative rollout approach. But again, I sort of go back to, we just don't have a fundamental comp where we can see that a software, in this case, an operating system integration, actually drives a hardware.
Given NVIDIA's recent business outcomes, the stock's gains don't appear to be out of proportion. For instance, during the first half of fiscal 2025, the 6 months ending July 28, 2024, sales increased 205% year over year, and over the same time period, earnings per share increased 285%. At a projected price/earnings to growth (PEG) ratio of about 0.36, NVIDIA is expected to continue its remarkable rise. Because the business's expected profits growth is significant in comparison to its earnings-based valuation, a PEG ratio of less than 1.0 is sometimes seen as an indication that the stock is cheap. Although NVIDIA's sales and earnings growth will undoubtedly need to slow down in the future, the company's momentum, leading position, and PEG ratio indicate that the stock still has potential. Later this year, the company plans to unveil its next-generation Blackwell processors, which might be a significant boost to sales and profits in the near future. Although there will surely be some cyclical fluctuations in the amount spent on GPUs to power AI applications, the field of artificial intelligence is still in its infancy, and NVIDIA is still crucial to its development. As always, sharing your thoughts and insights in the comments section can foster a more informed community discussion, helping everyone navigate the complexities of investing in this dynamic sector.